Welcome to TradeTheNBI.com. This is John's reports for the 12th. Then got some excitement from the market. Long anticipated CPI numbers came in still hotter than they should, but the Fed doesn't really care about that, and the market thinks that the Fed will cut anyway, and so the excitement was exuberant. And we shot up all the way back. It was fairly straightforward for us from the ABM green, stayed above it, and once it was above here, the midline, we got above the yellow ABM, and from there you expect to move towards the 100%. It just happened very fast. And modest from the readings. We still don't have any short interest whatsoever when you look at the MBI readings. There just isn't anything driving it other than just buyers. So likewise, we saw it here from DOC standpoint, where the green crossing above cyan at that particular stage, pretty strong. It was more clear intraday as it took place pretty early on. So it was all fairly clean from an NQ standpoint, pushing to new highs. So again, we talked about this. NASDAQ was the one holding things up. It would also be the one that if things fell apart, that would be where it would go. But continued its push all the way through after what I would call a healthy revisit of, the 76% Morganacci lines right there. So it just filled in what were positive extremes that we had right here. And then we had the secondary one was right there. And the very first one, though, takes us a little bit lower. That one hasn't been filled yet. That's the primary part of the breakout. So it's most likely where you'll see a dip because it will fill all the way back to that. So that's the important one to remember. We should put a line right there, right around 21. That's relevant because it will happen. It's just a question of when. See, the market got very excited because it's like, well, we can buy up as many treasuries as we want with the expectation that rates are going to get cut and they'll be worth a lot more, and we can sell them at the lower rate later and make the spread. And so the 10-year auction was very nice from that standpoint, but at the same time drives yield down. From an oil standpoint, there was a draw in oil, which means optimism has already started in extra consumption. But again, pushing back up over 70, that's a problem because you're not going to see core inflation decline. Now, they'll just rewrite how they view inflation, which is what they've been doing for decades. So it is what it is. From a euro standpoint, the continuation of the euro being a disaster isn't going to stop anytime soon. Just whether they can hold it above par is, even to the dollar. That's the only question. And it's going to be a struggle because, you get one momentary tariff movement, it's going to drive things upside down very quickly. And from a gold standpoint, you can see that nobody's buying the facade, at least from the gold bug standpoint, because at the end of the day, you can see the devaluation and there's no change in what is going to be deficit spending. Of course, now the argument has shifted from deficit spending to the fact that as it relates to the GDP, and again, nonsense stuff. But when you look at the real numbers of it, a large portion of what we call the U.S. debt is intragovernmental, and then the rest goes to the Fed. And then you have a smaller portion that's really relatively tiny that's owed to foreign investors and or the general public. It can't continue forever, but what it does look like, though, is from a regular expense standpoint, you have far less money to spend, even though it's kind of being shifted around inside the government back and forth. It gets complicated that way. But what it does do is it drives money away from investment in broader free market setups. And so then you become a question of, if you did put it into the market, what would it do with it? Is there capacity to even handle that kind of extra available cash? And so that is a secondary issue. Do we, with our efficiencies, produce more than we could possibly ever use? And that's probably the likelihood because, you can see the disposability of most everything that we create, and there is no limit to how much they can do that. From a Bitcoin standpoint, again, as much as people complain about Bitcoin, and that's like I've always talked about, it is a great place to park resources in a temporary fashion. Potentially easier than gold in the sense that you don't have to hold on to the gold, you don't have to pay for the storing of the gold, you don't have to move it around. It just gets you out of particular currency plays, particularly in unsettling environments. that has a function, and whether people think so or not, that's where crypto really has its base form, and then it becomes a question of adoptability and usability, and Bitcoin has become the main source of that. Now, if you get into an integration system where banks, everyone want to use these as a store of ledgers, or however you want to approach it, well, then you have a practical form of it. And this is where ETH and some of these others and the platforms that they build are meant to integrate that kind of speed of transaction. Um, and it's an evolving situation. And of course, it's not going to get an adoption until after, oops, nothing there, until after you get a complete uniformity from the big players buying into it and handling, which they've already done. So when we look at it from an intraday standpoint, you can see pretty early on in the pre-market, started up just before the open, tested that low end of the Morgan Stanley, and then it was just straight up from there, and it never looked back. By the time we get to the end of the day, a little bit of profit taking within that, filling back all the way to the beginning of this set of extremes, though it does leave quite a few from the original breakout. But that's sort of coincides with what we just looked at on the daily from the NASDAQ. And it could be some time before that fills in at this particular stage, barring any kind of major upset here in the EU session. Not a whole lot taking place. So not a surprise with the desire for things to want to move higher, simply because of the change that's taking place. It's just the world scene is getting a lot more dangerous, and it's going to create some complications. And we can see that the difficulties within China are not going to get resolved anytime soon. So this contagion reality is out there, and I think it's something you have to pay attention to in a broader sector. There's nothing that's going to happen immediately, but it could create a situation where things change, what some people might think is rather rapidly, but they've been sort of building into this world trade situation that could be explosive when Trump gets in. So we'll play it from there. As always, trade well. Have a good one. Anything relevant, I'll put in the Skype chat.